Welcome back to Power Lunch. Shares of our parent company, Comcast, trading higher by 3% after President Mike Kavanaugh said it's exploring a separation of the cable networks. Now, that separation would reportedly not include the broadcast network, NBC, or the streaming platform, Peacock. The comments came during the company's third quarter earnings call this morning. For more, let's get to our all-star media panel. Tom Rogers is executive chairman of Orbit, which focuses on distribution of AI-generated content and media. He's also the founder of CNBC and MSNBC and is currently a CNBC contributor. Joe Flint, media reporter for the Wall Street Journal, and Julia Boorstin is our senior media and technology reporter. Julia, let me begin with you. What have you learned? Put this in context about why it would happen and what are the hiccups to getting it done?
Well, look, this is all very preliminary. The reason why Comcast announced that they were investigating this is because they knew that as they have these conversations, something was going to leak out, and they wanted to clarify what they were looking at. Over the past couple of years, we've talked about the potential for Comcast to spin off NBC Universal as a whole. They're saying this would not be that. This would be simply the cable portfolio. We don't know how many or which of the cable channels would be included. For instance, CNBC, one of those cable channels along with MSNBC. They have said they want to keep NBC part of the original NBC Universal, and NBC along with Peacock would not be part of the spinoff. Why is that? That's because NBC has sports, and sports is essential to Peacock, and Peacock is very much part of the growth potential of the NBC Universal company, including, of course, all the potential synergies with the broadband and wireless that Comcast is so very much invested in right now. So there are a lot of questions about how this could happen, but the reason why we're talking about this now is because, of course, the weakness in the cable space. We've seen a decline in the total number of pay TV subscribers, and then also a lot of ad revenue really shift over into streaming.
All right, Tom, let me get to you. I mean, you have a strong track record of spotting the trend before it happens and taking advantage and creating a vehicle to drive in new directions with new media and new delivery services. What do you make of the idea, and how would you get it done?
Well, it clearly underscores the fact that we're beyond the point of no return with cord cutting. And these linear cable channels burden the other parts of Comcast, all of which have good growth stories against them. I personally believe CNBC in particular has a role in the streaming world under a very different model because it's about the only cable channel out there that's financial future doesn't have to rest on the consumer pocketbook. How many streaming services is a household going to take? 4, 5, 6? There are ways to support a streaming future for CNBC involving investor and corporate fees that I think would give it a very strong future. But there's certainly a rationale to say, look, cord cutting is not going to get better. It's going to get worse. Let's spin these off. I think the entertainment channels by themselves are weak assets for the future. It's very hard for any kind of standalone entertainment channel without being integrated into some kind of major streaming service to have a future. But if you package them with CNBC and MSNBC, both of which have enormous influence still in terms of who they reach, I think that you could find some very interested bidders for that vehicle should it be spun off as an independent entity.
So, Joe, why don't you react to what Tom just said, number one. Number two, I used to work for Time Incorporated, which is a big magazine publisher, as you may well recall. And
I did too.
Fundamentally, they did what is being discussed here. They spun off the magazine business. And in the end, it basically was the death knell for that business. Would you see a spinoff of this sort, even though there might be some healthy properties in there, as the death knell for the likes of Oxygen or Bravo or USA Network? In other words, in 5 or 10 years, if you do this spinoff, will those even exist?
Certainly, I would think some of those networks would go away. We actually wrote a story a few years back when this idea was kicking around inside NBC, and one of the thoughts was which networks might have enough diminishing returns to call for just pulling the plug on them, and Oxygen was certainly one of those, and E. And just to sort of weigh in more broadly, we've seen Warner Discovery take a almost $10 billion write down on its cable networks. Paramount took a $6 billion write down on its networks. So this is part of a broader trend of what's happening. It's somewhat ironic that all these networks are still very profitable. They are driving the investments for these streaming services, which are still bleeding red ink, but they are seen as albatrosses and slow melting ice cubes.